All right, if you've even glanced at your portfolio lately, you've probably felt it, that sinking feeling. The crypto market is seeing a lot of red, and believe me, this isn't just a small dip. We're talking about a widespread cool down that is pretty much everyone asking the same exact question. What is going on? So let's unpack the evidence together and figure out what's really driving this thing.
And yeah, let's just call it what it is. There's no need to sugarcoat it. What we're witnessing right now is a market bloodbath. The whole vibe is turned sharply negative. Prices are tumbling across the board, and honestly, it's leaving a lot of uncertainty in its wake.
But here's the thing, this isn't just a crypto story. You have to look at the wider market. The US Tech 100 index is down a sharp 2%. Now that's a classic sign of what they call risk-off sentiment. It's driven by fears, after the Federal Reserve basically said, not so fast to any hopes for rate cuts. And when the big traditional markets get spooked, crypto definitely feels that chill.
And boy, is that chill hitting Bitcoin hard. It is now threatening to fall below that huge psychological barrier of $60,000. If that level of support breaks, a lot of analysts are already looking at a potential drop down towards the low 50s. It's a critical moment.
It's not just Bitcoin either, not by a long shot. Ethereum has also broken through a key support level, dipping below $4,000 for the first time in 6 weeks. Look, when your top two assets are taking hits like this, you know the entire ecosystem is feeling the pain.
So, what is the deal? What is really causing all this chaos? Well, the answer isn't simple, but a good place to start our investigation is actually by looking outside of crypto itself. First up, we really need to zoom out and look at the bigger picture. The answers might not be hiding in the blockchain at all, but instead in this huge macroeconomic storm that's brewing outside. So you've got three major external threats that are just creating this climate of fear. You've got the looming threat of a US government shutdown, some really confusing jobs data, and to top it all off, the Fed signaling that those rate cuts everyone was hoping for, well, they're probably not coming as soon as the market wanted.
And think about the odds here. Experts are putting the chance of a government shutdown at 75% because political negotiations have just stalled out. A shutdown isn't just some political drama, right? It means real-world consequences, potential layoffs, serious economic disruption, and that makes any investor in any market pretty nervous.
And then you've got the jobs data. The headlines might say, hey, jobless claims are falling, which, sounds great. But when you actually dig into the details, you see that the numbers from previous weeks are being quietly revised higher. So the real picture is a softening labor market, just another sign that the economy is slowing down.
But the external market isn't the whole story. Let's turn our focus inward now, because the crypto space is dealing with its own set of really intense pressures.
Inside the world of crypto, the signals are just all over the place. On one hand, you've got some really bullish signs. We're seeing positive ETF inflows, and over $2 billion in stablecoins just moved to exchanges. That usually means buyers are getting their cash ready. But on the other hand, there's this growing fear of whale manipulation and a slowdown in institutional demand that's creating some serious selling pressure. It's a total tug of war. Just take a huge player like BlackRock. They were recently spotted selling large amounts of Ethereum, while at the same time buying Bitcoin through their own ETF. Actions like that, they just fuel theories that these large institutions are maybe, just maybe, creating this selling pressure on purpose to shake out the weaker hands and scoop up assets at a discount.
Okay, so with all this chaos, it is so easy to get lost in the day-to-day noise. So let's zoom out one more time and ask a totally different question. Is this crash just some random event, or is it part of a much larger predictable pattern that might actually be changing right under our noses?
The well-known macro investor Raoul Pal has this simple but really powerful theory for what drives all markets, including crypto. As he famously put it, it's the business cycle stupid. The whole idea is that the 4-year crypto cycle we all talk about isn't some kind of magic, it's just following the rhythm of the broader global economy.
So how could that rhythm have changed? Well, the theory points to this subtle but massive shift back in 2021, when the US government extended the maturity of its debt from 4 years to 5. That one move, that single change, may have actually stretched the entire business cycle by a whole year. And if that's true, it would push the projected peak euphoria for crypto from late 2025 all the way to mid-2026. A huge difference.
And you can see the effect of all this fear and uncertainty right here. Bitcoin's dominance is climbing, jumping from 57% to 59%. This is a classic flight to safety. When investors get scared, what do? They sell their riskier altcoins and they move that money into the relative safety of Bitcoin.
And the result is that the altcoin market bleeds even more heavily.
And yeah, this flight to safety has caused widespread damage across the altcoins. All the major players are at these critical make-or-break points. Solana is testing its 50-day moving average, which is a key indicator for its trend. Cardano is struggling to just stay above 70 cents, and XRP has lost that crucial 50-cent support level. These aren't just numbers on a screen, they are the last lines of defense for the short-term trend.
So, we've looked at the external shocks, the internal conflicts, and these pretty wild long-term cycle theories. Where does that leave us? What's the path forward from here?
You know, in the end, there's no single culprit here. There's no one smoking gun. What we're seeing is a perfect storm. It all started with those macroeconomic fears from the outside world. That fear was then used by players inside the market to push prices around. And this is all happening against a backdrop of deep uncertainty about whether the fundamental market cycle itself has changed. It's a recipe for a crash.
And this leaves us with the ultimate question, doesn't it? Is this just a painful, but maybe ultimately healthy reset before the next massive leg up in the bull market? Or are we witnessing a fundamental shift, a whole new reality for crypto, where the old rules and the old 4-year cycles just don't apply anymore? Honestly, the answer to that remains unwritten.